Oh boy, do we have a big week coming up in the stock market, ladies and gentlemen. We have a lot of companies reporting earnings, and I'm not sure if you knew this, but earnings season is upon us yet again. We had some banks last week, a couple airlines, I believe, and this week we're really going to start getting into the exciting companies. We have Netflix, Tesla, we have IBM. Just kidding, IBM is not exciting, but we have Snapchat, and we have a lot of other companies as well that we're going to break down in this video. So sit back, relax, take a sip of your coffee, and let's dive into it. And by the way, if you all find value, hit that like button. Feel free to subscribe and get your 15 stocks from Moomoo and your 12 stocks from Webull. Link down below. And now let's talk. So again, this week is going to be a big week. A lot of companies reporting earnings, and this is coming after a week that was pretty devastating, I'd say. Well, maybe not really week over week. I guess we were pretty flat last week now that I'm looking at it, but Friday was devastating. I mean, Friday was a bloodbath for the markets, and in general, Thursday and Friday, both of these days, we saw a lot of volatility, a lot of major swings. SPY went from 348 to 365.70, and now it's back at 355. Triple Q went from, you guys know, I mean, you guys saw the markets last week after the CPI data came out. Triple Q 254 to 272, down to 259. So a lot of volatility on Thursday and Friday. And who knows if this is going to continue. At this point, the futures market, when I'm filming at about 11:30 a.m. on the East Coast, is not open. It opens up at 6 p.m. if you guys didn't know that. So we'll see what the futures are looking like. But at this point, coming up with all I can say for sure is with these earnings coming up, and especially big tech at the end of this month, not this week, but next week, yeah, there's going to be some fluctuations in the markets, and I feel like we're really going to start picking distinct direction because last week, yes, we ended off the week on a huge red day, no doubt about it. Triple Q down 3%, SPY down about 2.3%, but overall, you're noticing other than that one-off dump to 348, which we hit that after CPI came out, SPY's been holding about 355 pretty steady. I mean, since the end of September, about 3 weeks ago, right? It's been holding that point pretty steady. So at this point, with all these earnings coming up, we're going to need to pick direction, a distinct direction, not a little one-off dump, and then we saw, a huge V-shaped recovery like we saw after the CPI. Are we going to dump and then stay down? Are we going to take out 355, 348, and start going 340s, right? Low 340s? Or are we going to get a lot of buying pressure this week? Who knows, right? Maybe at 355, 360, and then all of a sudden, we're pushing the highs from Friday, which were right around 370. And mind you, again, Friday, we were pretty bullish in the morning. We were looking good, and then markets open, and then everything obviously collapsed from there. SPY was at 371 Friday morning in the pre-market. And again, it went down to the mid 350s. So, yeah, we're waiting for that distinct direction. We're just not getting it quite yet. And, of course, you can make a clear argument that the bears have the advantage. I mean, look at this. We put in a lower high on Friday. If I show you all this on the 4-hour chart, we hit 371, like I said, on SPY. That was a lower high from the previous 380, and we closed on a 2.3% down move. So, I mean, at this point, if 355 breaks, that's kind of what I'm sticking to. We're probably going 348. 348 breaks. Obviously, it's going to get more bloody from that point in time. And if Triple Q starts moving under 260, right? We ended up going under 260, but then we obviously closed above it on Friday. If we take 260 out again, take 255 out, which was that high from a couple days ago, I think, Thursday? After CPI. If we take 255 out, we're probably going to start going to that pre-COVID all-time high, which I've said it time and time again here on the YouTube channel, guys. It is right around, I think, 235, 240 on Triple Q. Yeah, right around that point. So what do you guys think? I mean, this week and next week, big tech, all these companies, banks, Tesla, Netflix, Lockheed Martin. We're going to talk about all these today, guys. These are all reporting. What do you guys think? We're going to have to get direction. Let me know your thoughts in the comments down below. And we might as well just start talking about these stocks. Last week, I'm not sure if you caught it. I'm sure you did. But we had JP Morgan report earnings. They did pretty well from what I remember. Yeah, double beat. The stock ripped up, closed 1.7% in the green. But earlier in the day, it was at 115 and we closed at 111. So we actually pulled back about 4% intraday. So JP Morgan, they double beat. Looking strong, stock starting to break. We were at $100 earlier last week, and again last week's high was $115, and it doesn't look like we're getting any sharp pullback yet. I mean, we took the highs out from the beginning of October as well, which is good. So let's see what we do. I'd say at about $115 on JP Morgan. If we could get buying pressure out of there, there's going to be a lot of upside in my opinion. So we had JPM last week. This week, we have Bank of America, BAC. They report tomorrow morning. Yes, let me make sure. Tomorrow morning, Monday morning. And they pretty much broke even on Friday, but earlier in the day, and mind you, they closed at 31.70, so keep that in mind. Earlier in the day, they were at 32.60, so they did move down about 3% intraday here from the high to the close, but still, they pretty much broke even. And actually, they had a 1 cent green day, guys, which is a 0.03% green day for Bank of America. All right, fine. They had a green day, barely. EPS for Bank of America, the average estimate is looking to be about 77 cents on revenue of $23.57 billion. So if I remember correctly, Wells Fargo, I think all the banks went up last week, but Wells Fargo missed on EPS. They missed on EPS, if I remember correctly. And Morgan Stanley, wow, they went down 5%, so never mind. They didn't go up. I think their earnings were horrible, if I remember correctly. But overall, it's interesting. We saw Wells Fargo miss on EPS pretty badly, and their stock is up. So it's going to be one worth watching. And I've said before, I'm not the biggest bank investing guy. I'm not somebody that really could just dive into a bank and truly fully understand it. And I've been open about that. Banks are not really the companies that I strive to buy for the long term personally if I'm looking at individual stocks. But yeah, I've said I wanted to buy JP Morgan, but now it's starting to get away from me a little bit. I want it at 80, 85, 90 bucks. It's now at 110, 115. Who knows? It might be going higher. I'm not the biggest bank stock guy, but still, I'm watching Bank of America. All these are down significantly. And whenever banks are down significantly or any stocks are down significantly, I really want to pay attention and try and soak up and learn and just really pay attention, as much as I possibly can. And in this case, Bank of America tomorrow morning, earnings are coming out. Goldman Sachs, we also have them coming out, I think Tuesday. Let me double check. Are they Monday as well? No, they're on Tuesday. That's right. I knew that. That's before the market on Tuesday. Their EPS is looking to be $7.69 on revenue of $11.41 billion, which would be down if that came in. And again, these are all estimates, guys. Estimates, right? That'd be down 2.3% year over year. So Goldman Sachs, and mind you, a lot of these technicals for a lot of these banks, they look horrible. Bank of America look bad. Goldman Sachs, arguably even worse. So at this point, we have a head and shoulders on Goldman Sachs. Am I looking to really trade this? Not really, to be honest, unless I'm going short, because by the looks of it, we still have a head and shoulders here. We closed down 2.3% on Friday. There could be a down move coming here, maybe towards 285, 290. That's totally in the cards. So I'm not looking to really trade these. But again, going back to what I said before, I'm just paying attention to them. I'm watching them, because if Goldman Sachs starts taking out 290, I'd say 275.7 would be next, roughly right around that little $2 window. Then if that were to break, guys, we're talking about some serious downside here, maybe to that pre-COVID all-time high, which was right about at $245 a share. So, yeah, this is not setting up nicely. Let's just put it that way. And, you could argue, fine, you could argue on the 3-year chart, now that I'm looking at it. We do have a bit of a wedge here on Goldman Sachs. We do, and we're, sandwiched between these moving averages. But let's just say this. I'm going to put my alert at 280, right by the 180 SMA here on the 3-year chart. If that point breaks on the downside, sayonara Goldman Sachs. It's probably going down to 245.50. That is my thought on this in the short term. Now to transition away from the banks, and we didn't talk about every bank reporting, but, the big dogs, right? Let's talk about J&J. J&J is also this week, and last I checked, let's see here. Last I checked, this is starting to creep up a little bit. Last week, J&J was at 159.60. We closed the week at about 165, mid 160s, and now it's starting to move. And I think it looks like it closed above the 50, not really above the 180 SMA, but if this starts moving above 166, let's just say 170 in general, which, I have my alert at 170. That was support back in the middle of June, middle of July, middle of August as well. If we break 170, we have a wide open gap on J&J. And this is not a stock that is going to move from 170 and fill the gap to 180 in a day or two. I mean, it could. I mean, that'd be a freaky day for J&J. But it could be one that over the course of maybe a couple months, a quarter, maybe a couple weeks even, who knows, right? But it could be one that could be a more of a midterm swing. That's kind of how I'm looking at it. And with earnings coming up here on the 18th, which is on Tuesday morning, I'm watching it. And hopefully we get some, what would be ideal here would be if they do well on earnings, guidance is strong as well. We get the up move out of these moving averages. We take the highs out from the end of September, early October. We break 170, and then boom, we have a play in our hands, just like that. That'd be ideal. But of course, with the stock market, you never know. But that's kind of what I'm banking on. That's what I'm looking at for this week on J&J. So EPS, they're looking to do about $2, or the average is $2.49. Revenue, $23.41 billion. So watch out for J&J. I know it's not the sexiest company. It's pretty boring to track, to be honest, but it's one worth watching this week. It's reporting earnings. So the next one, Procter & Gamble, guys, which is one that just has been, holy crap, this has been destroyed. I mean, this company, and you guys remember, at the end of 21, heading into 2022, a lot of investors were flocking into value plays, even at the end of 2021. I mean, we're talking over a year ago at this point, August, September, October of last year. A lot of people were flooding into these companies, the Procter & Gambles of the world, the value names, right? Because they were more, considered safe havens, and they still are, but clearly, maybe not Procter. Well, it's still a safe haven, but I don't want to say safe haven. That might not be the right term. But people think, oh my God, we're going into a recession, right? We're going to dump our growth stocks and go into safer stocks like Procter & Gamble. Although no stock is 100% safe, there's always risk. You got to realize that. But this ran up. A lot of value stocks ran up. And look how much has gone down from that point, from the beginning of this year. And it really started peaking in the beginning of this year, but it really started selling off aggressively towards the end of April, early May. Ever since May, Procter & Gamble has just been dismantled. I mean, from 165 to now 145, it's down 25%. And to be honest, this needed to happen 100%. And I was telling you guys this in real time. Maybe not so much with Procter & Gamble, but do you not remember when I was saying this with Coca-Cola, to get a little off, off topic here? Well, it's still, I mean, it's a stock. It pertains to this point, but Coca-Cola was super overvalued. I mean, who would be buying Coca-Cola at 60, 65, almost $70 a share? I mean, the PE was pushing, I think, mid-30s, almost 40 for Coca-Cola at that point. Maybe not 40, but for sure 30, mid-30s, if I remember correctly. I mean, correct me if I'm wrong in the comments. I mean, these stocks, people were flooding into them because they were so scared about growth, what the Fed was doing, from free money, 0% rates to jacking the rates up. People were getting out of these growth stocks. They were willing to pay anything for the safer stocks, the Cokes, the Pepsi. Let's see what Pepsi was at, by the way. Let's see here. Well, Pepsi's been doing very well. Pepsi's an outlier here, kind of. This was pretty overvalued then. I guess it still is now, but it's been doing pretty well. They just crushed earnings. They have pricing power. So does Coca-Cola and Procter, but I don't know. These were just way overvalued, and look how much has come down, guys. And at this point, now might be an opportunity, maybe not to get in as a long-term play, but if we start seeing a break, maybe towards the mid-120, well, we're already in the mid-120s, but low 130s, mid-130s, that could be a shot or a chance, in my opinion, to look at something like this, maybe as a short-term trade. So EPS $1.55, revenue 20.35 or 34 billion, which would be up about 2% year over year. Not too bad for Procter and Gamble. So yeah, I mean, these were just way overvalued. Now they've gotten to a point where they're probably still overvalued, but a lot of the air has come out. People are probably transitioning now. I mean, think about it, guys. A lot of these higher growth stocks, even the big tech names, a lot of them have gotten destroyed in the past couple of months. A lot of money. What do you think's going on here? A lot of money is going out of Procter, out of Coca-Cola, out of these value plays, and people are most likely buying things like the big tech names or other growth stocks that have come down a ton in valuation. That's just my speculation here. So LMT, Lockheed Martin, this company is on, I think, Wednesday. Let me double check. No, they're on Tuesday, guys. Before the market opens on Tuesday, LMT is reporting they're looking to do $6.66 on EPS versus, they're not even versus, but on revenue of $16.65 billion, which would be up about 4% year over year. So not bad, 4% year over year in a recession. I guess that's not too shabby for Lockheed Martin. And looking here at the 3-year chart, if you ask me, this looks pretty good. This honestly looks pretty good. When it was at 480 during the whole Russia-Ukraine peak fear, end of February, early March, it was just way too hot. You can see it here on the 3-year chart. And now it's come down a considerable amount, 20% bear market, and it looks like we're at these moving averages now where, we've held the uptrend over the past couple of years. Do you guys see what I'm saying here, right? So Lockheed's one that I'm really looking at here in the, mid-high 300s, low 400s with earnings coming up. So watch out for that. We also have Netflix coming up this week. Let's pull this up. This is one of the big tech names. Well, I don't know if I guess it still is big tech. Maybe not FANG. Or FANG's not even a saying anymore, guys. You can't even use that because Facebook's not. It's Meta now. So whatever the new saying is, I don't even think Netflix is in it, but whatever. They're reporting this week, and this stock has been moving horizontally, like I've called out before. We've had support at 215, resistance at 250. Now we're at about 230. We're wrestling with the moving averages here on the 4-hour chart. So I think if we pick distinct direction above 235-ish, 240, there could be more upside on Netflix. EPS is looking to come in at $2.13 for the quarter on revenue of $7.84 billion, up 4.8% year over year. So I really think, guys, and I've said this before, but I'll mention it again now that we're on the topic. If 250 breaks on Netflix, which I don't know, could happen maybe this week, possible. It's that type of stock. If it breaks 250, we could slowly, not in a day or two, maybe not even in a couple of weeks, but we could slowly start filling the gap to about 300, 330, maybe even higher than that. That's about 30% higher from where we are now. That might be a little bit crazy, but that's all. That's what I'm banking on, kind of. I'm not in the stock and gambling on it or banking on it, but yet rather. But if it breaks 252, that's when I'm going to see the technical break. And that's when we'll be able to play it, in my opinion. Or I'll be able to play it. I'm not telling you guys what to do. I'll be able to play it at that point. So we also have Tesla. I was about to say Netflix again. Tesla. And before we even talk about Tesla, which you guys probably saw my video from yesterday anyway about Tesla, make sure to get your 15 stocks from Moomoo. If you haven't done so already, use that link down below. Deposit at least $100. You could get up to 15 stocks, each up to $2,000, and you could also get 12 stocks from Webull with any amount deposited. I appreciate all of you guys. As always, all those links down below help out the channel, and without you, this would not be possible. So Tesla's reporting this week. EPS is looking to be about $1. Revenue is looking to be $22.07 billion. And the technical setup right here does not look good at all for Tesla. We have lower highs being made pretty much throughout the entire year this year, and we've had a lot of bear market rallies in the stock, but overall, clear as day, bears are in charge. We're under the moving averages. We have a death cross, and at this point, Tesla's holding above $20 by a thread. If it breaks $20, it is going to collapse. I think it's going to start going down 175, 180, and I've seen price targets out there, 140, 50. I mean, Who knows where it's going to go under 200? But all I know is we have a descending triangle in play. 200 breaks. It's not going to be good for the Bulls in the short term. Let's just put it that way. So we also have IBM this week, which isn't the most fun company to track, but they are looking to do $1.78 in EPS. Revenue is looking to be $13.53 billion, which, get this, guys, that would be down 23% year over year. So IBM's earnings, which are coming out on the 19th after the bell, that is on Wednesday, they're not looking to be good. Let's just put it that way. They're not looking to be good. So watch out for IBM this week. We also have AT&T. They're looking to do 61 cents on EPS on revenue of $29.86 billion, which, holy crap, AT&T has been down. It's $15 a share now. It is down from $20 a share a couple months ago. It is down 28%. So this one, from my understanding, has not cut its dividend, which its shareholder base is holding it mostly due to the dividend. Come on, let's be honest here. So their dividend's got to be 9%. Let me see here. Not 9%. Yeah, 7.5%. All right, pretty close. Holy crap. So they're not cutting their dividend, I don't think, anytime soon. Maybe they will. We'll see if it gets really ugly out there. I don't know. But right now, if you're holding on to this for the dividend, I'm not a financial advisor. I'm not telling you what to do. But if I were holding on to it, first of all, I wouldn't rely only on one stock for dividend income. That's number one, first of all. To be honest, if I was in retirement and I had, let's say, a couple million and I wanted to get dividend income, I would need at least 20 stocks if I was doing individual stocks, right? At least 20, 30 dividend stocks. So if maybe even 40, I mean, honestly, a bunch. So it's diversified in different sectors. So in that case, let's say you had 20, 30, 40 stocks, or maybe just a big dividend ETF, or not a big, or just a dividend ETF or something like that, or even VOO, that pays a dividend. Let's say you have that, or what am I trying to get at here? I lost my train of thought. But overall, if you have a big amount of money in AT&T, and you're getting that dividend, I'd be a bit worried about that. I'll be honest. I might even consider trimming a little AT&T. But let's say if it's, you have 20 stocks, AT&T is one of them, is 5% of your portfolio. You're getting an 8% dividend from them, which is a little bit worrisome at points. You might be like, oh, is this dividend going to last? I wouldn't worry too much if it's a smaller portion of your portfolio. Let me put it that way. But if you're living off dividend income and it's a big portion of your portfolio, I'd be like, all right, I mean, you might want to put some money elsewhere. That's just my thought. And keep AT&T. I'm not saying just sell out of it completely, but just diversify a little bit. But anyway, I kind of got into a little tangent there on AT&T, but 7.5% dividend is pretty spicy. That's a high dividend. So 2 more stocks, guys. If you stuck till the end, you're awesome. Let me know in the comments. Stay stuck till the end. I appreciate you guys as always. Or drop some money emojis or something like that. Stock emojis, rocket emojis. Drop whatever you want. American Airlines. I think we had Delta last week. I think, right? This week we have American Airlines. They're reporting on, let me double check here. They report on the 20th, which is on Thursday. They're in the morning. And overall, this is also a descending triangle. Look at that. So keep that in mind. This is not looking the best. So, I mean, it's trying to break out of the top of the triangle, which would be nice if it breaks $14, $15, but it's not doing that yet. So, in the meantime, we got to be mindful of that. If it starts coming back to about 12, starts breaking 12, 11.50, watch out below for American Airlines. And we also have Snap this week. Let's pull that up. Last stock for the video, guys. Snap is under $10 again as of last week. It went down 5.5% on Friday. They report on, let's see, was it on the 20th, which is on what? Is that Thursday or whatever day that? Yeah, that's Thursday. They report after the bell. So Snap's in heavy desperate need of some good news. I'll just leave it at that. They need some good news because this stock, it's almost like it's pricing in, not bankruptcy, I'm not going to go crazy like that, but it's pricing in a significant change in the business. I mean, maybe it just got that overvalued to the point where it got stretched to 83. Now it's at 10, so it's like it's a crazy down move. It's down 90%, but the way it's going, I mean, it's like Snapchat is worthless at this point. I mean, and the thing is, it's not. That's the thing. I think it's a pretty good business. I mean, sure, it's not the best business. It's not as good as some other ones that we've talked about that are in the tech space, but it should be one that I think starts moving back to the teens at some point, or maybe even over $20. But at this point, you really can't predict when that's going to happen, because there's so much going on under the hood at Snapchat. We're in a recession, inflation. There's so much uncertainty. You just don't know. So with that being said, that's it. I'm going to wrap the video up, guys. We went a little bit longer on this. Let me know in the comments. Do you guys like the 15-minute videos, 20, 25? I kind of do enjoy making the longer ones sometimes, but I feel like I can't do them all the time. But it's really up to you. I mean, if you guys wanted me to make 25, 30-minute videos every day, and maybe we can talk more about, different topics going on in the world, maybe we don't have to go all in on stocks. I mean, obviously, I'm not going to start talking about politics or anything like that, because to be honest, I don't like politics. I friggin' hate politics. But if you want to talk about, maybe we could talk about things going on and the economy overseas, more about the U.S., different sectors, whatever. Let me know in the comments, and make sure to hit the like button on this video. Subscribe. Check out my Patreon and get your 15 stocks from Moomoo and your 12 stocks from Webull. All that is linked down below. And with that being said, thanks for tuning in. If you stuck till the end, drop those emojis down below. I'll see you later, guys. Peace out.